those revenue management officers, they don't like to let airplanes go down the runway less than 80+% full anymore. So you need to tell me the price that everybody paid before I get really excited about packed airplanes. Anyways, I'll get off that soapbox right now. Look, I think, as we get into 2026 and we're looking at schedules, we're seeing a lot of the growth coming from the big full service carriers. United especially continues to sort of pour on the gas here and put a lot of capacity in the marketplace. Delta a bit less than them, American even a bit less than them. And as we get into the new year, we're going to have Southwest starting to sell premium seats, and everybody's got a plan for bringing more premium seats to the marketplace. So, when we just look at the full service carriers, they're going to grow higher than GDP levels. They're going to be, actually not the latest GDP number, which is a bit hot, but you're going to see like 3-4% seat growth in the first half from those big full service carriers. I think that means there's probably a risk premium seats are going to start to feel some pressure on fares. And that's been, the really big driver of this business, especially for those big full service carriers. It's been driving their profitability. On the economy end, we're seeing Spirit Airlines there, sort of between this world and that world a little bit. We're trying to figure out if they're going to survive. Might get bought by Frontier. They've dropped a bunch of airplanes. We're seeing some of these carriers cut capacity because of weakness in those seat prices. So I think we'll start to see at least some, firming up of that basic economy as the market tries to get that back in balance. So I think that's what we're going to see in the first half of the new year.
So it sounds like there's going to be a surplus of those premium seats, and then that leaves a big empty hole here for the Frontiers and the Spirits. Are they going to be forced to offer also some kind of premium version of what they currently have on offer?
I don't know. I think everybody's trying to figure out a way to get more premium in their airplane. They're not forced, but they want that premium travel that's going to just keep flying through, through good and bad economic times, and not have the challenges of inflation on their budget and things like that. So I don't know if they're forced, but we're definitely seeing all of them look at ways to increase the price they can get the customer to pay for a seat, whether it's block a middle seat, so it might be 3x3 kind of airplane. They might block the middle seat. Some of them are talking about putting, more recline and nicer seats in the front of the airplane. So I think everybody has a plan for how to get more premium in their airplane. And again, that's going to mean, like everything in the airline business, we'll get offsides on premium before it's all done. I think it begins in the first half. I don't think premium seat prices are going to crater. Unfortunately, we're not going to be able to go anywhere really super cheap flying in front of the airplane in the first half of next year. But I don't think it'll be as good as it was in 2025.
Wages, that's a big cost component for these airlines. I want my pilots happy. I want them feeling like they're well paid. Talk to us about the dynamic in the industry.
Yeah, look, we still see, I don't know that I want to call it a shortage, but it's a difficult balance between the number of pilots out there and what's needed by the airlines, and the the number of people coming into the industry and getting air transport licenses and things like that. And so the pilots are still decently paid. They came off decades ago. They just had many, many bad years. There was a surplus of them. So they've been catching up, and they got these 20% increases in the last couple of contracts. And in the last contract, we saw a 20% increase and then a 4%, 5%. So actually, it was a 5 and a couple 4s. But 4% salary gains, increases, they're pretty nice in this economy. And the airlines really can't afford that kind of inflation in their cost base. The pilots are a big part of it. And so they keep rolling out bigger airplanes, and that's another challenge in the marketplace, right? Is you put a bigger airplane behind the pilot so you could defray their costs over more seats. You got to fly all those seats into these markets, and sometimes you're discounting more to fill the airplane. So that's a challenge and continues in the new year. We think the airlines will be managing cost inflation there, in maintenance, in gates, everywhere.
So wages a big part of the airline's costs, the biggest part, but then fuel is the second biggest, or can be. And jet fuel has actually come down in 2025. Is that going to continue to be a tailwind in 2026?
So, we looked at it recently. We put it out on the Bloomberg Terminal BI space AIRLN. We did some scenario analysis on this. Look, I have a hard time seeing fuel prices dip significantly lower than here, but I am no oil man, right? If I was, I'd own a football team. But I'm no oil man. I don't know necessarily where those prices are going. All I can tell you is if they stick around $2, the airlines had a nice tailwind from fuel last year as fuel prices fell. It buffered their margins. If they stick around $2, they probably get a bit of a tailwind in the first quarter, but as they roll into the back part of the year, they're not going to get a lot of gains from fuel. That's not going to buffer their margins. But we'll see. I mean, fuel has dipped below $2. It could stay below $2, I guess, if you see slower GDP growth. Could be a bit of a buffer, but we don't think as much as in 2025.
Did the airlines hedge their fuel exposure? Because, boy, I think I'd be hedging right here if I were CFO.
Not anymore. I think every so often they surprise you. And so I hear what you're saying. Like, you could see one of those crazy CFOs out there going, hey, we might as well hedge here. Could be as good as we get. We saw Southwest do that a number of times in their history and win big. But for the most part recently, what we've seen is almost the entire field does not hedge fuel prices anymore. If you think about it, they kind of sell tickets out 6-8 weeks, so they have sort of a future commitment for fuel prices out that far. If fuel prices rise dramatically, I think everybody in the marketplace adjusts fares fairly quickly because they're not hedged. And so I think when they look at the pack that they're flying in, maybe the airlines, they think no one else hedging fuel. I'm not going to run the risk to be wrong in a hedge. We'll stay unhedged.